Hey, what's up, guys? Snowboarder Mike here, fresh off the slopes. 13 market moves. We are going to do JD earnings today. Um, we're taking a look at this one. I mean, JD is amazing. Okay, I like to call it Baba's little brother. It's about $150 billion company. Look at this move. This is a monthly chart. I have never seen an 87 on an RSI of a monthly chart. It's just absolutely phenomenal. And you can see all these other indicators that we would normally look at here are just, I mean, they're pointed straight up. They're just pointed straight up. So let's dive in here a little bit, see what's going on. Take a look at the charts, use the 13 market moves, put together a bunch of different information and find out a plan for playing this guy. JD is going to be interesting tomorrow. So buckle up and let's go. Okay, so as I was saying, we've got bullish indications all over the market. This is a sentiment indicator from StockTwits. We're at nearly 100% on a bullish sentiment. We've got a below average short interest at the moment, 35 million versus an average of 40, call it 45 million. We had a 6.5% gain on Friday, including the post market. We actually almost had an 8% gain. We've got institutions that are expanding their holdings in the stock. We've got analysts that are absolutely nothing but bullish. So looking at all of this, I mean, the charts also are kind of mirroring the sentiment. You can see here the 50-day moving average is the support for the stock over the last year. And we just kind of had a little bit of a shakeout operation last week. We bounced off the 50 and up we go. This price action is a little unusual for this one. I mean, you can kind of see we went up, down, up, and we sort of double topped. So, that's just something to consider. But when I looked at the option activity recently, this is a cool chart. These green dots are call buying, and the larger the dot, the more buying that there was. So you can see here, this is the 100 strike with the biggest green dot. We have a lot of activity at the 95 strike, and right around 90 is about where the stock is now. So we got some buying there, but you can see it's sustained buying for the last week. And then these red circles are the put options. So back at the end of October, we had somebody kind of go big on the 80s, but after that, we've got virtually very little put buying activity. So that again is reiterating this bullish idea for this stock. So all of that said, buy calls, video's over. This is way too easy. Sorry for wasting your guys' time. No, just kidding. You know that's way too easy. That's not the way it goes. We're going to take a look at some historic data. This is earnings day performance. So there's kind of a lot to unpack here. So for the last 7 quarters in a row, we've got gap ups. You can see those here. So we're looking at 10% on the high end and look about 2% on the low end. But this here where it says pre 1.2, that's 1.2 million shares traded in the pre-market. So when it's green, the earnings day performance was positive. And then when it's red, it gapped up and cracked. So of these 7 gap ups in a row, 5 of those actually had a gap and crap. So not quite so easy as just be bullish and everything's great. So, and this is kind of irregardless of here they had a miss. Most of the times they do beat, and they actually beat by quite a bit. This is one of those companies that just sort of recently became profitable. So that's a big deal for them. If they were to have, it looks like 2 years ago, they had a quarter in November where they actually had a loss. So we've seen a lot with companies recently that, these newer companies that are teetering on profitability, that's a huge deal, whether or not, you have a positive or negative quarter. So that's something we really have to watch out for. All indications show that they're going to be profitable, but I think it would be worth it for us to take a dive here into some of these recent quarters. And let's take a look at the price action on earnings day over the last 2 years, and we'll get an idea of how we might want to play this one. Okay, guys, so we're going to start with the current chart. So we have something to compare these historical charts to, just kind of a picture in the back of our mind. So remember, we had these big moves here, kind of shakeout type of a move where we were up, then down, and then up again. Let me just pull this up here. So you can see here something like this. And we have that like double top, and that was a 16% move in 3 days right here. So kind of a big move, slightly over what the average trading range would be, with a 6.6 move on Friday, and on really high volume. So average volume on this stock's about 12 million, and we had about 22, 23 million on Friday. So that is very bullish. Um, if we look at the intraday, we had a gap up and a dip, and then buy the dip, right? And we're going to see a lot of that here with JD. So I want us to pay close attention to the moving averages, because they are really a great place to find support for the stock. So as we look at all these 15-minute charts, what we're going to have is these the blue line and the white line are going to be the 15-minute averages, and then these sort of stepped lines are going to be 50, 20, and then the 9 EMA is this purple line. So the 9 EMA tends to find support for the stock quite often in these scenarios. So let's just take a look at some of these. If we go back to the most recent quarter in August, we had pre-market volume of 1.2 million on an earnings beat. And then for this stock, as we looked at that chart earlier, 1.2 is pretty low as far as earnings pre-market volume. So kind of what we had, again, we have a sort of a buy the dip scenario, and then we just sort of went up and kind of, in fact, kept going up. This is a really interesting, because you could have you could have shorted the open and made some quick money, or you had the option to buy the dip. So if we had bought the dip, it turned out to be the more profitable play in this instance. The stock ended up going up the entire week, and by Friday, what was an $8 call ended up being $560. So that is just huge. It's a 6,900% return. Absolutely amazing. Just amazing. So keep that in mind. Low volume, pre-market, buy the dip, and the thing just keeps on going. Now, in relation to the moving averages, you can see we were pretty much in them when we had earnings. So not exactly the scenario that we're in now. This chart from May of this year actually looks a little bit more like where we are at. So we had this big move up, right? And then earnings are here, and we're getting pretty far away from these moving averages. You can see some similar to what we have now. And what ended up happening is we just right at the open just fell, and we did that for about the first hour and a half, and then it just sort of came back up in a sort of a move 12 type scenario, and then from there we had another day going up, and sort of you can see again we're getting really far away from these averages, and stocks don't really like to stay that far away from their averages. It's just a little bit ahead of their skis, if you will. So kind of going back through some more earnings, we go all the way back to February, and you're gonna get sick of hearing this gap up, pull back, and going up, right? And we go back to last year this time, and we have gap up and fall. Okay, so again, shorting the open is going to work in every scenario we've looked at thus far, with these gap ups and then the early fall. Now here again, what we see is look at how far we are above the moving averages, and they do end up being support for a small bounce at the end of the day. So pretty consistent there as well. And then we'll just keep kind of going back a little bit here. Gap up, comes down at the open, first 15 minutes, finds the 9 EMA, and up we go, right? Let's see here. Back to May of last year, gap up, falls at the open, hits the 9 EMA, and stops. Okay, moving right along. Clear that up. February of 19, humongous, look at this, humongous gap up, huge drop. So again, first hour, hour and a half, that's why I like these yellow candles for the first hour. You can see we're going into about an hour and a half, and we find support this time above the 9, actually in the 200 period of the 15 minutes. So that's um, something a little bit different, but really the pattern of behavior is the same, right? So moving back to 2 Novembers ago, here's our first gap down. Okay. Um, and so let's take a closer look at this. You can see here we are sort of in these moving averages. So again, a different scenario. We open below them. And again, even with this different scenario, we still have this initial dip. They buy the dip. They can't quite make it back up to the moving averages. And then we fall. So even though the scenario is different, we still have a similar picture in mind. Okay, so putting all this stuff together, obviously we have a tendency to gap up, right? Almost every single time we have that gap up. And then we're going to have that dip in the very beginning of the day. That's even if we didn't have the gap up, we still had that little bit of a dip, right? So those are two things that we can kind of count on for if this is going to act the way that it normally does. Another thing is the volume. The lower the volume, it's kind of just like the market where you're going to have a higher tendency to be bullish and sort of melt up. So keep an eye on that pre-market volume. If it's under 2 million, there's a good chance that the day is going to be bullish. If we're up somewhere in that like 4 to 6 million, there's a better chance that that day is going to be bearish. Okay. And then, if it is bearish, we're going to look for support on these dips in that 9 EMA or in the 15-minute 200 period EMA. So this is this chart right now as it stands Sunday evening. You guys are probably going to be watching this on Monday morning. So what's likely to happen is this 9 is going to ratchet up just like it has been doing. And this is going to continue up here. And we're going to be somewhere around 88, 89. I'm not sure exactly. But, that's kind of be our first idea of where the support might be for that first dip. And or, if it ends up being kind of a short the bounces type of scenario, that's probably going to be the first place where it bounces. So there's a few ways we're going to be able to play this. Option one is we just short to open, just get in. This is for those people who like to make a quick move, high probability, again, that target of 88 to 90. But we're going to want to watch the premiums because they're going to be elevated right now. And right at the open, they're going to be trying to find out, their balance point. So a lot of times you might want to wait 5 minutes, but if the thing is dropping right away, then just get in. So that's option one. Option two would be just to buy the dip, right? So we saw from the last quarter that was a very highly profitable scenario. And if we do have a gap up and then a dip, that should bring the premiums down by quite a bit. And we might be able to play that at least back up to the open, So you're going to have to watch that. Again, we're high above the moving averages. So like we talked about, the stock is going to have a tendency to either want to drop back down or to consolidate. So those are some things to keep in mind. Now, if it doesn't do any of the things that we talked about, if it's doing something totally different, then let this play out, right? If it moons and it just rockets at the open or does something totally different, then just let it kind of play out. You don't want to be too far away from home base. If we do get really, really high, if this thing is at 110, 115, something like that, we've got a short trade setting up, and you're going to want to just let that play out and maybe do it Tuesday morning. So that's another thing to take a look at. Again, looking at this chart, we've got, kind of move 7 behavior, something sort of like a move 11, and then another 7. So, drops tend to happen after, a 7. So we're likely, if it gaps up, we'll get a move 2, something like that. So definitely, some moving parts here, but generally, we've got everything sort of lined up for that, gap up, dip, potential continuation. You guys get the picture. If you don't get the picture, maybe you need a little bit more training. Like trading is hard, but it doesn't have to be. There's people out there with this organization that you can get a 20-minute phone call. You're going to start getting yourself on track to understand all of the things, understand the thought processes that go into this and how you can use these setups and these different moves to get a better idea of the probabilities of what's going to happen next. These guys are super nice. That's fun. You guys know this channel. I don't have to drill this into you, but 13marketmoves.com. Click on the link, schedule the call. You're gonna be super fucking happy that you did. Just do it. I mean, it's one of the best quick decisions you're gonna make. So with that, trade like rock stars. Have fun tomorrow. This is a great week. We've got a lot going on, so just stay on your toes and trade like a rock star. Later, guys.
Let's trade!